K. Mistry, the Vice Chairman and CEO of India's largest mortgage lender, HDFC. Hi, Mr. Mistry. What do you make of the stance by the RBI? Were you surprised with the cautious rate cut?
I don't think we were really surprised because we thought there was a very strong likelihood of a 0.25% cut in rates. I mean, let's look at the macro environment around us. Everything in India today looks so very good. Current account deficit under control, fiscal deficit is under control, inflation has come down, rupee is stable. So therefore, there is some incentive that probably needed to be provided to industry in terms of improved sentiment, and that coupled with the fact that inflationary expectations are reasonably manageable going forward, I think has given RBI the impetus to cut rates. Now, what we need to bear in mind is a couple of things. This year we had very good monsoons, and that could be another driving factor. And the other is the expectation that the rural economy going forward will start doing a lot better than it has done in the last couple of years.
Right. Mr. Mistry, the point about expectations of real rates, to that question, the governor and his team said, well, we're okay with about 125 odd basis points or roundabout as far as real rate is concerned. Under the last regime, it used to be 150, 200. That specific comment, do you think we should read too much into it, or it's kind of too close to call? In terms of dovishness, interpreting it as dovishness, go on.
I think it's a little too tough to call. But clearly the stance towards lower interest rates, the stance that we are now going to look at growth with with same degree of importance or with some degree of importance and not only at inflationary expectation. I think these are some of the things which one can sense from the tone in which the policy has come out. But I don't think a number like 125 or 150 or whatever is a very sacrosanct number, and you should just go by that number. But clearly, the indication is that we will have a policy or a policy regime where there is plenty of liquidity which is there in the system. The idea is to promote growth. The idea is to promote investments. And I think India Inc. will make investments in the coming 2-3 quarters. And I would be surprised if we don't see a big pickup in private sector investments in the near future. Not just because of the rate cut.
No, absolutely.
Because of a number of factors.
Absolutely. I think that's a very well-rounded view. Mr. Mistry, I request you to just stay with us. I also have Mr. R.C. Bhargav now joining in, Chairman of Maruti Suzuki. Mr. Bhargav, thank you very much. Good afternoon. Prashant this side, sir. It's not as if Maruti needed any help in selling more cars. You're doing perfectly all right without the cut. And I can safely say that for this sector as well, but Maruti really has been on the top of its game in terms of sales. But what do you make of the 25 basis point cut and what it can do for your industry per se?
No, I don't think it's going to do very much for our industry because, as you said, we are selling everything we can produce. If at all there's a problem with us, it is on the problem of increasing production. So this rate cut, but rate cut generally for industry is good. I think everybody's been wanting rate cuts for a long time. And the expectation is that rate cuts will promote investment, will promote growth, and conditions today are such that inflation should not be a risk.
Okay, Mr. Bhargava, just taking from Prashant's point, I understand that it won't significantly impact the industry per se, but would you be able to give us a sense of the kind of increase in private investment and growth that you can expect, given that there will be at least some sense of increased liquidity into the system?
It'll take a little time for this to play through, and it depends how the banks pass on these rate cuts to the actual borrowers. Because in the past, we've seen that rate cuts have not been followed by almost similar rate cuts for lenders.
Right.
Borrowers, rather.
Okay.
So see what happens.
But in the auto sector, I mean, the one segment which benefits is passenger cars. I mean, two-wheeler finance.
No, both with commercial vehicles.
Commercial vehicles and passenger vehicles. Essentially four-wheel.
It should lead.
Yeah.
If it's passed on, it will mean the lending rates for vehicle loans will become lower.
Yeah. Mr. Mistry is also with us, Mr. K.K. Mistry from HDFC. Mr. Mistry, if I can bring you in, and you heard Mr. Bhargav saying that they're selling everything they can produce. I mean, their challenge is actually to increase the production, out there. You want to come in there, sir? I mean, you began by saying that it's all in a way lining up for India.
See, what I was trying to say is that it's not only interest rates which was going to determine investments. Investments is determined largely by the kind of excess capacity that you carry and the fact that you think you need to build more capacity. And as far as that is concerned, I think we are today in a position where clearly capacity utilization is going to be a lot faster in the coming 6 to 8 months compared to where it has been historically. And that I'm saying on the back of the good monsoons, the pay hike, the government pay hike that happened to government employees, the amount of rural spending that we have seen in the current year. So what we've been seeing over the last couple of years is that whereas the urban economy has been reasonably strong, it's the rural economy which has been lagging a little bit because of the poor monsoons. And that will get corrected in the current year.
We actually conducted a poll amongst the top 50 CEOs. So this is 2 days back. I mean, across industries, across sectors, across the country as well. And to one specific question, and this was the question which we put to them, is high cost of money impeding growth? I mean, you would have thought that to a question like that, an overwhelming majority would say, well, yes, high cost of money is hurting growth. But surprisingly, it wasn't the case. Almost 35% of those we polled said that high cost of money isn't an issue. I mean, so I think it very well echoes what you're saying, Mr. Mistry.
Absolutely. I don't think it is interest rates as much as the fact that people need to see that demand. And we will see demand picking up over the next 2-3 quarters. And that, to my mind, will result in faster capacity utilization, which in turn will lead businesses to make more investments.
Mr. Mistry, then can we expect accelerated passing on of lending or deposit rates soon? And how soon can you expect that?
Well, I think it's an ongoing process. You see, when RBI cuts rates, it's not that everyone's cost of funding comes down by a similar sort of a number. So if RBI cuts rates 25 basis points, the cost of funds of a bank do not come down by 25 basis points straight away. So there is a time lag which takes a year to first reduce your deposit rates. As you reduce your deposit rates, your new deposits come in at a lower rate. Over a period of time, the old deposits get cycled. So this happens both on the way down when interest rates are coming down. It also happens on the way up when interest rates are going up. But clearly, liquidity in the system has been adequate. Incremental funding costs for everyone has been a lot lower. So my sense is you will see some degree of the rate cut being passed on to consumers over a period of time.
You, Mr. Mistry, meet investors all the time, and you got a real pulse of what are the dominating drivers at any one point as far as investors are concerned. I'm talking about portfolio investors. If I could just ask you for your thoughts on that. I mean, rates here going down, at some point rates, for example, in the US going up.
Right.
I know that's a slightly a question away from your sector per se, but how would you kind of look at that?
No, my sense is that the portfolio investors today are extremely comfortable with India.
Okay.
Globally, they have seen that growth has slowed down everywhere. There is a likelihood of global growth further slowing down in the coming months. So I think India stands out. Fundamentally, our economy today is in very strong footing. I think I mentioned earlier, current account deficit is low, fiscal deficit is under control. Inflation has come down big time from the double-digit levels we used to have to now much more manageable 5% levels. Rupee has been a lot more stable. Why it's stable? It has actually appreciated over a period of time. So I think all the macro numbers look very good. It's just the private sector investments which have been slow to take off. And my sense is that will happen once we start seeing increasing demand arising out of the fact that, demand picks up and capacity utilization increases.
Right. Mr. Bhargav, just one last question to you, sir. Banks, when the question was put to them, well, RBI has cut rates, they said, well, we'll think about it. There are other factors which are involved as well. And you heard Mr. Mistry as well. But do you think under the new dispensation of the RBI, with the committee, the government also part of the decision-making process, the transmission process will be faster and more effective? Mr. Bhargav, any thoughts?
No, I think what Mr. Mistry said is very valid because the banks have to ultimately look at their own bottom line of the balance sheet.
Okay.
And unless the cost of fund goes down, they can't really lower interest rates.